Europe going into a recessionary phase, let's say, for example, 8-9% may not hurt too much. NA 78-79%, if that is slower for longer, do some pockets come out and quote unquote bail you out, or could it be like what it would have been typically assumed to be in the past?
Two parts to it. One, every company and every industry, so for example, India in IT services is different than US in IT services. That's one dynamic. Within that, companies within the sector are different. There are large caps, which are general purpose IT services. There are persistents of this world, which are very, focused, differentiated, and so on. So we all have to find our own revenue pools, profit pools within this. And as long as we can be the green apples in a sea of red apples in that market, we will be able to differentiate. We'll be able to get the growth that we can. So if we look at even the last, COVID times, in COVID times, as Persistent, we were able to find our own niche in enterprise software, in digital engineering across the enterprises, etc. While a number of our peers, even in COVID times, we grew by 12.9%. Today, if we look at it, we are trying to figure out our own niche, our own playbooks, as we may want to say that, in, for example, enterprise software. So we have a fairly strong seat to the table, right to win in that. If you look at enterprise software as an example, there are many companies that grew very well over the last decade. They were, venture funded companies, became unicorns, became public companies, public SaaS companies, and so on, with huge valuations. Last 1 year, their valuations have literally gone anywhere between -30 to -70, -80%. A lot of them grew with the whole philosophy of growth at any cost. Today, it is not growth at any cost. In enterprise software, for example, there's a rule called rule of 40. It is basically your growth and EBITDA put together, greater than 40, you are golden. Now, growth is not going to come. So you need profitability and you need sustainability through this at a lower growth. So it's even more important that you globalize, you work with people who can help you in that journey. And from our perspective, look, we have good capabilities, we have good global presence, including India, which is the largest pool of talent, and the scalability that India can provide, not many other countries can provide. And further, with the Ukraine-Russia dynamic, Eastern Europe is out of question for quite some time. So there are dynamics like this, along with the dynamics that Nitin said, which we will have to figure out our own. And we have, as a proof point over the last several quarters, won significant deals, 50, 70, $80 million TCV deals in enterprise software, and using the same tenets in BFSI, in healthcare. So every one of us will have to figure out how do we figure those revenue pools, our own differentiation, and win. And as long as we can do that, the companies of our size, whether it is Mphasis or Persistent, I'm sure we can continue to grow at a pace which is higher than large caps from India or from other countries.
No, but on a relative basis, it's fine. Just because companies like yours, Nitin, or Persistent, Mphasis, and a few others have kind of spoiled people with the run rate that we've seen through the digital 2 years, right? So that's my question, Sandeep, that in a slowing or a recessionary Western world, can these growth rates get impacted? Relative basis, it may look okay. Absolute basis, can they come out despite the order sizes that both of you guys would be sitting on?
Yeah, so look, we have been growing fairly strongly in the last 2 years. Some quarters, if you look at the year-on-year growth, has been at 40%. It may not be at 40%, it may be still at double digits, very good, healthy, this thing. And that may be a smaller or a shorter term impact. And over the longer run, I'm pretty sure if we have the differentiation, we'll grow at very, very healthy rates. And even in these times, I'm pretty reasonably confident good growth rates will be there. And anything above double digit rates is a good growth rate for any industry, any which ways.